Hi, this is Andrew from Trading Mastery and welcome to today's trading tip. In this trading tip, I'm going to be talking about what we call the price breach. When a market has been stair-stepping in a particular direction, whether it be in the currency market, the futures market, the oil market, the gold market, in fact, no matter what time frame we're talking about, when a market has been stair-stepping in a particular direction, there is a strategy that you can use to be able to determine, well, are we now heading into a new trending direction? And I'd like to share with you that by going to the charts right now and sharing with you on the euro against the US dollar, a currency, but it applies the same way on other markets as well. So let's get to the charts right now. Enjoy this video update, and of course, if there is anything more that we can provide you with regarding education and trading tips, jump across to our website, tradingmastery.com.au. But let's get to the charts right now and let me share with you how to watch out for a price breach.
Okay, we are on the 1 hour chart here, and we're going to focus here on the Euro USD. But the price formation I'm about to show you and the breach that we see in the market, you can use this strategy on virtually any market, any stock, any futures market, currencies, oil, gold, whatever it might be. We're in this example using the 1 hour chart, but it doesn't matter whether you're using a 30-minute chart, a 4 hour chart, daily chart. The price breach works the same. Now, what we're looking at here is making sure that we understand, first of all, the stair-stepping formation that happens in the market over time. Now, what we can see here is from the top of the move, we've seen the market move down, it moved up, it moved down, it moved up, and it's starting to create these stair-step formations here. And you can see here is the high, here is a low, here is a high, a low, a high, and a low. And what we've seen then is the market's come up and created a little high right here where my crosshair tool is, has come down and was not able to make a new low. So therefore, what we need to understand is when the market has been in a stair-stepping formation, where has the recent, in this case, recent high been? Now, the recent high was right here, and the market has rallied up through there and breached through that level. It's come down and it wasn't able to make a lower low under this level here, and has rallied back up and breached again above this stair-stepping formation. So for 2 times now, we've seen the market breach through this level, breach through this level, and therefore the stair-stepping formation to the downside has now been broken. Where was that initial price breach? It was right here when the market breached through this stair step. So if we were to then follow the market as it stair stepped higher, the market would step up, down, stair stepping up, stair stepping up, stair stepping up. And we can very clearly see at the top of the move here, we have a pullback here and a rally up. So this is the high, this is the recent low. The market's then come down, and right here, as it's passed under this yellow line, which just is a moving average, a 200-day moving average, as it's passed under there, it's breached through this key level here. It's then rallied up, couldn't come up to the high, and then it's come down again and broken to a new low for a second time, another price breach. So now we've changed trend direction. And the reason why I'm sharing this with you is because this can be a strategy, an edge that you can use with whatever indicator you're using, whatever technical setup you're using, to help you understand, is the market likely going to continue to be bullish or bearish in the direction that I'm looking to trade. So let's follow the market down as it's been stair-stepping to the downside. And what we're going to see here is that ultimately what we see is the market again comes up and breaches through this level here. We've seen very clear stair-stepping to the downside here as the market's been stair-stepping down. And here we've breached up through this little recent high here. The market has pulled back, and again, it's breached it for a second time. And what we then see is the market continue a stair-stepping move higher until we get a breach to the downside again. So what we're seeing right here, right now, if we actually go and have a look and see where the market is presently, and we always, obviously, it's very easy to look back on a chart, but we want to be looking forward. if we're looking here and saying, well, where would the market need to breach to the upside for a change in trend direction? Well, it would need to breach above this key level right here. And until the price came up and through this key level here, I would consider this market continuing to stair step to the downside. Now, we could go out and we could look at a different time frame. We could look at a 4-hour chart. We could look at a daily chart. We could look at whatever time frame we like. In fact, let's go out to a daily chart now and have a little look here. And I'm going to scroll the chart back and I'm going to give you an example of where the market's been stair-stepping to the upside and then has had a price breach. You can see very clearly here on our chart that the market came up and made a high right here. The previous low was right here. The market came down and breached through that level there. It came up, couldn't make a higher high, came back down, didn't come through this low, but eventually right here it breached again to the downside here, and this second breach here started a new trend direction to the downside. And eventually we will get a price breach that will move the market to the upside. But it's that second price breach that I want you to keep an eye out for. And when you watch this consistently and apply it to your trading strategy and you use a very simple way in which to do that, for example, I'm going to show you here on the daily chart if we were looking for a price breach in a new trending direction. We've seen the market come very sharply down, up, and right now you could argue that, gee, it looks like we're sort of going into a tight sideways range. If we broke to the upside and breached through this level here, that would be the first price breach. What I would be then looking for is the market to come down, and the second breach is the one that often signals that, hey, we are heading into a new trending direction. And it doesn't matter whether it is a stock, a commodity, a currency, whatever it might be, you will be able to find these price breaches by simply looking at the stair-stepping formations in the market. Let's just have a look at one more here, and we're going to have a look at the US dollar against the yen. We'll go into the 4-hour chart, and I'll just scrunch my chart up so we can see it very clearly here. We can scroll back a little bit, and I encourage you to do this yourself with your own chart to look to see where the market has been stair-stepping. In this particular case, the market had made an impulsive move to the upside, it pulled back, it came up, it came down here, and here's that first price breach. It's rallied up again, and then that second price breach, and the market fell away very quickly. When the market fell away very quickly, it came up and it breached through this previous high into a new trending direction. So therefore, there's the price breach to the upside. And eventually, we will have had a break of that breach back down to the downside. So whenever you're looking at a chart, I want you to consider and just ask yourself the question, where has the market been stair-stepping? In this particular case, right now, we can see the market's come down, it's come up and gone sideways. So if I'm going to make a new low, then that would be in the current trending direction. But if I was going to make a new high, the market would want to breach up through this key level high here, up through here, a little pullback and another breach up. That to me would be a strong move to the upside that would have a probability of success and give you an edge to follow. Look for the stair steps, look for the breach, make sure that you follow it consistently, and I'm sure it will help you with your trading, whether it's oil, gold, currencies, stocks, whatever it might be in that trending direction. If we can help you any further with any of your trading education, here at Trading Mastery, we offer free mini courses as well as some fantastic webinars that you can access via our homepage, tradingmastery.com.au. Until next time, happy trading.